Hej och varmt välkommen till Börssnack med mig, Erik Hansén, marknadsanalytiker på IG. Ja, vi har kommit till avsnitt 122 och Börssnack är en podd från tradingmäklaren IG. Se till att ni prenumererar på podden och följer IG på sociala medier. Länkar finns i poddbeskrivningen och läs mer om IG på ig.com. Ja, veckans avsnitt består av ett samtal som jag hade med en väldigt intressant person. Inför det här avsnittet så körde vi faktiskt en liten tävling på Twitter där man kunde gissa vem gästen var baserat på några ledtrådar. Och hittills då när vi spelar in det här så har det faktiskt ingen som har gissat rätt. Och är det ingen som har svarat rätt innan tävlingen är avslutad så kommer vi lotta ut priset till alla som har varit med och deltagit i tävlingen där. Men personen då som jag ringde upp, det är faktiskt ingen mindre än Denise Shull. Hon är inspirationen till karaktären Wendy i tv-serien Billions. Wendy spelar då en performance coach och en psykolog till en hedgefondfirma. Det som jag tycker är intressant med Denise, det är att hon besitter både kunskap kring trading men även psykologi. Hon började sin tradingkarriär på tradinggolvet i Chicago. Hon har en magisterexamen i neuropsychoanalysis och har skrivit artiklar som går emot allt egentligen vad vi lärt oss kring hur vi ska hantera våra känslor när vi tradar. Denise har också skrivit boken Market Mind Games som jag starkt kan rekommendera alla marknadsaktörer att läsa. Och idag då så jobbar hon som en performance coach åt framgångsrika traders, förvaltare och idrottare. Alla med erfarenhet vet ju att det är minst lika viktigt att analysera sig själv som det är att analysera marknaden. Ja, det här är ett samtal som ni inte vill missa. Nu kör vi!
Börssnack med Hansén och Olavi.
Denise, welcome to the show. Thank you very much for being here.
Thanks for asking me.
Of course. So I have read the book Market Mind Games and of course seen the TV show Billions, where you are the inspiration of the character Wendy, who plays a psychologist and performance coach. So my first question is, how much of Wendy is Denise in the show? I mean, how much is it? How much is reality?
There are quite a few sequences that are substantive. You know, when she's actually coaching someone, like when she's talking to Axe about why he lost $400 million in season 1. Later in other seasons when she's talking to Taylor about using her intuition. So like her personal life, I have nothing to do with that. But her professional life, and when she's really coaching, I mean, there's some coaching scenes where she's kind of like, you know, she says some silly thing because they have to dramatize it. But the detail and the substance is, you know, she learned that from me. They learned it from me. Yeah.
Okay.
Does that answer the question?
Yeah, of course. And today you are working as a performance architect. But let's take it from the start. You began your career in Chicago, right?
Oh, gosh. Well, my real career began with IBM. And, you know, I thought I was going to climb the IBM corporate ladder back when that was a big deal. And then like 5 years into it, I thought, oh, my gosh, if I have to sell people computers when I'm 40, I'll like have to slit my wrist. So I basically went to graduate school in neuropsychoanalysis, which is really like, how do we have an unconscious? How does the human brain have an unconscious? That's what really that was about. And I wasn't sure if I was going to get my PhD, but I was dating and hanging around a floor trader and hanging around with a floor trader from the SIBO, the options exchange.
Yeah.
And these guys thought I would be a good trader. And so like I ended up going upstairs to trade with them in 94. And then the whole neuropsychoanalysis thing seemed to go by the wayside. But then years later, like 10 years later, it all came back together where the research was starting to show you had to have emotion to make a decision. And I was like, well, all the trading psychology says you have to take the emotion out of it. So I basically started talking about it. And then people invited me to talk about it, and it kind of took on a life of its own. And now, 18 years later, here I am talking to you.
Yeah, and in the trading psychology books, I learned that I should separate my feelings and emotions from the trading, but you have a totally different opinion about that.
Yeah.
Can you tell us a little bit more?
So the reality, like the neuroscience brain reality, is you cannot not have feelings. And if you somehow did, if you were brain damaged in a way that you didn't have emotion, you wouldn't be able to make any decision. What people don't realize is like confidence, the belief that something's going to work out. Your analysis of the market, and you buy something here and it's going to go up. You have a feeling about that. It's that feeling that allows you to take the trade. Without it, you couldn't take the trade or decide what day to go to a doctor or what shirt to wear or what cereal to eat or anything. So this was the thing that was coming to the forefront in 2003, that I was like, well, wait a minute, we're telling everybody take the emotion out, separate the emotion, but if they literally did it, they couldn't make a trade. It's really just a misunderstanding. It's a misunderstanding of what emotion is, how it actually works in perception and judgment, why you need it. And what you really need to do is control your actions through understanding/analyzing your emotions, so you know which ones are giving you information and which ones are irrelevant.
Do you think still that Wall Street don't respect neuroscientists? They are saying that we don't.
Yeah, there's some of that. I mean, most people don't know, they're just working on outdated information. So like last week, I recorded a podcast for a guy that's really into behavioral finance. And behavioral finance is very cognitive behavioral, thinking and behavior. But I'm going to sneeze, so that's why. But like that's missing the juice. That's actually missing the foundation. So, I mean, there's definitely people who are resistant to the reality of this. And, I get some terrible reviews of my book, and I know they just can't stand the idea that emotions are important. A lot of people are just miseducated I think of the old view of emotion as like flat Earth as opposed to round Earth. Like a lot of people just think the world is flat, and it gets repeated and repeated and repeated. So people believe it.
In sports, I learned that just to shake it off, if you had a bad game, put that behind me, think positive, and maybe train even harder.
Right.
But is that really the correct way to go?
I don't think so. I mean, what the research shows is if something doesn't mean very much to you, then you can use your intellect to, for example, shake it off. That was a scrimmage game and I don't really care. But even then, the reality is an athlete usually really cares. Now, it is true that the people around them can make it so clear that they don't care that it changes how you feel about it. So I'm not saying that that's a completely useless strategy, but I am saying most of the time it doesn't work. And in fact, it tends to backfire because you feel like you're supposed to be able to shake it off, and maybe you can't, like it really bugs you. But you can't talk to anybody about it because everybody says you're supposed to just shake it off. So then you're like, you have whatever the original problem was, and you have the problem that you can't execute on what is supposedly the best advice. So you end up saying, what's wrong with me? Which only complicates the original thing that you're upset about. Like you have a double problem then. If on the other hand, you go, look, if you feel mad at yourself, disappointed, frustrated, those feelings are meant to push you to say, okay, what do I need to do differently? What could I have done differently? You know, did I need to train more? Did I need to focus on this? The unpleasant aspect is meant to get your attention. And then if you analyze why you feel crappy, like you can get some information out of it, like how to avoid feeling that way in the future, how to fix the problem. That's the way it's really supposed to work. And if you do that, you process your way through it. Like you learn the lesson, you resolve it for yourself, and then you really can shake it off. Then you forget about it. Like, okay, you know, you're just over it. You're over it emotionally, and you've learned something. The just don't feel it, the shake it off tends to avoid that. I'm just gonna give you one example. Last year I was working with a group of athletes, and the coach was like, our strategy is, you know, fail and forget. If we fail, we just forget, you know, fail and forget. And I could tell the guys on the team were like, yeah, we fail and forget, we fail and forget. And then like I got them kind of deeper into conversation. And then one guy says, so sometimes when I fail, I can't forget. And I like, yes, right, I know.
And I guess that sometimes action can just be a cover-up for a emotion or a feeling.
A lot of times.
For example, you're feeling uncomfortable and you feel like you need to take action to feel better. This is definitely something that I've done many times, and then always ask myself, why did I do that again?
Yeah, well, no one's taught to just have their feelings. And guys, men in particular, are not taught to just have their feelings and understand them. So they want to get rid of them. They either want to talk themselves out of them, which usually only works a little bit, or they want to do something to distract themselves, get rid of the energy, oftentimes literally act out the feeling they don't want to have. So like in a trade, someone's feeling nervous. You know, they thought they understood their setup. They knew it was going to take a little while to work out. Then they're getting nervous about, is it going to work out? Or, you know, they made some money and now they're going to give the money back. Instead of just having the skill of sitting with that anxiety, they push the button and get out of the trade early. And then it works. And then they're like, why did I do that again?
And you are working with high performance market participants and athletes as well. But if we're talking about the markets, the traders and the fund managers that you are working with, what would you say separate those successful market participants from people with less success in the market?
You know, the big thing is that the fund managers understand the market as like a human perception game, like a variation on poker, at least the better ones. So like, for example, they may analyze, and most of them do, you know, they analyze the big global macroeconomic environment, and they analyze the company, you know, if it's a stock, or, you know, currency, they you know, analyze the global macro and the intercurrency effects, if you will. And they know, like technically, according to those models, this thing should be worth that, right? They know that. But they also know that's just like a data point. And what they're trading is other people's, the waves, the ocean waves of perception that come and go around where something theoretically should be trading. And the best, like I have a guy that is he's a long only manager, meaning he doesn't short, you know, he only goes long. They invest in small, weird companies around the world. He's got we built a waterfall of all of the things they look at. At the end of the day, he looks at that chart and goes, is this thing got momentum upward or downward? And that's really about how are all the other market participants. So that's what they understand, that they're trading other market participants. And they just have a better feel and sense for that.
In other words, they see the market as a proxy for people's outlook?
Well, in their relative reaction, that where it's supposed to be trading by any metric, whatever, is only like a clue.
Yeah.
Not an answer.
Some people have a very big need to being right all the time. Almost like their need to being right is bigger or stronger than the desire to earn money in the market. Have you met anyone with that ego?
Oh, totally.
Okay.
I had a client a few years ago who had been successful as an analyst at a hedge fund, well-known hedge fund, struck out on his own to have his own fund, had a very fundamental approach, stocks, so company analysis, the company should be worth this and the, whatever, valuations. And literally at the end of the day, all that guy was doing was trying to prove he was smart. And it was really clear to me and everyone around him, including his next older brother, that he was the reason he was so attached to proving he was smart is because he was the youngest of 4 children. And his next older brother was like 3 to 4 years older than him. And so my client had always been the little guy who didn't know what was going on, right? His whole life, 3 years old, his brother's 7, 5 years old, his brother's 9. Like the big kids always knew more. And of course, when you're the little one, you're always trying to be part of the, the older kids, right? So his life experience was, I don't know enough, I'm not smart enough, which was just anything that happens to a kid in that circumstance. But he refused to see it. And he was forever doing stupid stuff to prove he was right. And we couldn't get him to, he was just in denial about what was really driving him. Most of them aren't. I mean, most of my clients who come to me aren't in that degree of denial, because why hire me, pay all this money to figure this thing out, and then go, no. But
is it correct to say that we trade our personality or our life history?
Yeah, I mean, and that's true on a few levels. I mean, first of all, there's a zillion different ways to make money in the market. Trick number one is to find one that makes sense to you. And in my case, I started out in a shop that was very scalpy. This was back when stocks were trading an eighth and make an eighth, lose an eighth, make an eighth, lose an eighth. And I would see these stocks move and I'd be like, this eighth thing is crazy. So I switched shops, went to a place called Schoenfeld because they were much more momentum driven. So there's that. There's the finding a method that suits your personality. But then the thing that people do that they wish they didn't do, whether it's, when I first started, one of my friends that got me, he would make a bunch of money, lose a bunch of money through getting really stubborn and never been able to solve that problem. Get in too late, get out too early. Whatever the pattern is, there's always an emotional narrative that's self-image related. When I first started talking to people about trading psychology, it was really just this: you have to have an emotion to make a decision. I had this background in psychoanalysis, understanding why any of us do what we do, but I literally wasn't expecting my psychoanalytic training to inform my trading psychology. And then within the first year and a half of doing it with some clients who, presented problems, I couldn't help but divorce myself from that. I was like, wait a minute, he's telling his life story in his P&L swings. And there was one guy that was like massively clear that that's what he was doing. And as soon as he realized that's what he was doing, he stopped.
So you can almost quantify your emotions and feelings and overlay it to the P&L curve.
Yeah, I mean, I find that easy to do for people. It's hard for, people do. I mean, and in my book, I try to lead people to be able to do that.
Yeah, and traders and portfolio managers at the firms, are they open-minded to have conversations with you, or is it first when they have big drawdowns and are willing to try something new?
Pain does motivate people. So, most of the time, there's some pattern a trader or portfolio manager sees that they can't resolve. And so they call. I mean, occasionally we get somebody who says, I just want to be better. I mean, we have some professional athletes who are doing great, but just want to do better, But usually it's, I have this pattern of behavior and this pattern of P&L that I can't solve, and help me solve it.
Yeah. In sports, I think it's more natural to have a coach compared to in business or in trading or in the investment world. But are they interesting at Wall Street growing for your business recent years?
Yeah. On one hand, there have been like performance coaching in investing and trading for 20 years or so. On the other hand, there's really only like 6 or 8 of us that do it, if even that number, that really do, professional traders and hedge fund managers. There's a handful of companies now who are doing like behavioral analysis with software, but that's a little bit different. It's growing. I mean, I think the pandemic helped a little bit in that portfolio managers who would otherwise always be traveling and distracting themselves with, going to China to find the research, to find the truth, to, should they be invested in whatever, Baidu or, Neo, or now they're like had to sit at home, and in the sitting at home have thought, maybe I should get a coach, because they had less activity to distract themselves with.
I guess that many of your clients at Wall Street are maybe workaholics. Is that a correct assumption? If it wouldn't,
they work a lot.
Yeah, if it wouldn't be work, maybe it would be something else. Those people will use to escape their feelings. Maybe training or alcohol, drugs, gaming or shopping, etc. Is this like addictive personality also something that you are working with the people?
I don't think of it so much that way. I mean, generally people are really hard workers, and generally they sit in front of the screen too many hours. You can't manage money professionally and be spending too much time, under the influence of alcohol or drugs. But you also got to realize, the people I am working with are a select group, right? So if someone's really using alcohol or drugs to cope, they're not calling me. So I probably don't, I don't have like an unbiased database.
Yeah.
Do
you think people are underestimating the value of balance in their life? I know that you have a trader friend that had a heart attack when he was 36.
People definitely undervalue time away from the screen, time away from the analysis, time working out, good sleep, Like I literally recently started working with a chief investment officer of a huge hedge fund. And he's been in this business for 25, 30 years. And he told me he basically, since he got in it, he hasn't slept normally. Meaning, you know, up for the Asia Open, up for the London Open, up for the New York Open. Now, I don't think I'm going to change that guy's sleep patterns. I also know that if I could, he'd make more money. Like the hedge fund or the individual trader that would value taking a nap, taking a break, will make more money. Back when I was at Schoenfeld, I was a day trader and I was only allowed to trade 8:30 to 11. This was Chicago time. And 1:30 to 3. I had a forced 2.5-hour break in the middle of the day. Now, part of that was because the markets don't do that much in the middle of the day and they didn't want us chopping ourselves up. But like I would go to the LaSalle Club and work out and sit in the hot tub and take a nap. And I always had plenty of people taking a nap with me. And I'd go back in the afternoon, it was like a totally new day. Like whatever I made or lost in the morning, like it didn't, that was such a fresh perspective to trade the last 90 minutes of the day. But the, you know, mentally tough, grind it out. Oh my God, I only got 3 hours of sleep last night. People still think that's a good idea. It's not. You'll misperceive the risk. You'll take risks you shouldn't. You won't think clearly. You'll miss things. You won't have confidence. You'll be irritable. It's all bad.
Okay. So now the audience know that we can't take a decision or a trade without any emotions or feelings. What's the next step to awareness? Where do you start when you meet a client?
Well, where I start when I meet clients and where someone who's not my client can start are probably slightly different. But the first is just like getting in the habit of asking, what am I feeling and why am I feeling it? With no judgment. And with the objective or intention of getting the answer right. Now, that's an easy thing for me to say. And it's an easy thing for you to understand. What am I feeling and why am I feeling it? It's not so easy to do. And it's really not so easy to do to get it right. So, but nevertheless, you got to start somewhere. And usually some attempt is better than no attempt. Like some exercise is better than no exercise. And the idea that you should respect that and not judge yourself, that can have a huge impact. Like there's an emotional logic to absolutely everything. That if you really understand the situation the person's in, why they're feeling what they're feeling, like whatever they did makes perfect sense. It just usually they're applying emotions about a bigger picture to a smaller decision. So like the latest research, brain research shows, number one, we're always predicting based on our past experience. And the most important thing we're predicting is how we're going to feel. It's called anticipatory affect. So like people don't, and how we're going to feel, the number one thing like our brains are worried about is, are we going to be safe? So you get into a trade, it's not working. Most people, your brain is going to go, okay, this is a threat. You could not be safe. And not be safe can include not only, losing money or death on the other hand, but it can include like being embarrassed or being mad at yourself. There's some future emotion. So people can start with, what am I feeling and why? And what feeling am I really predicting? So when people are either entering or exiting, but it's usually exiting trades in a way they don't want to, they can find out that they're actually predicting, being mad at themselves, which is unpleasant, or being embarrassed, where they have to tell their wife or husband or boyfriend or girlfriend or their boss or the other traders, and like actually realize that it's this anticipation of embarrassment that's driving them, and get that out in the open, then oftentimes your cognition, your thinking then can kick in and go, it's not worth messing up this trade because I'm afraid of embarrassment. But as long as you don't know that you're trying to avoid embarrassment, you're not going to be able to stop messing up the trade.
It almost sounds like you need to have a skill to learn how to accept the feelings. And when you accept the feelings, they might go away. Like what you resist persists.
Yes, yeah. yes. What you resist persists. That's totally true. And conversely, though, what a good amount of research shows is that if you can put the feelings into words, they get in your way less. So that's been shown with actual portfolio managers. It's called emotion differentiation. But there was a study that came out and said the more a portfolio manager can differentiate amongst their negative emotions, is it fear, frustration, disappointment, and what degrees of fear, frustration, disappointment, the more money they make with basically in good odds trades, high risk but good odds trades. Conversely, there's research that shows like with teenagers or even kids, the more they can differentiate amongst their negative emotions, put their fears, frustrations, disappointment into words, the better they do in school, the less they binge drink, the less trouble they get into, depending on how old you are, obviously. So there's this skill of being able to put your feelings into words.
And that takes me to a question that I'm wondering about, is that how are our feelings when we are taking a good decision? What do we feel?
How?
Yeah, how?
Oh, what do we feel?
Yeah.
Well, feelings are like fingerprints. So everybody's going to be different. They look the same, but they're actually different. So, I mean, some people would feel happy, good about themselves, right? Some people feel like, oh, it's just impending doom because the next decision is going to be bad. Yeah. Some people, the phenomenon of being unable to accept success and more comfortable with failure is a real thing. Again, it's self-image driven. Like, where does a person really think they're supposed to be? How successful are they allowed to be in their family structure? Like, what did people expect of them? So those things come into play. Yeah. There are people who feel really relieved when they lose a bunch of money.
Really?
They feel bad, but when they're truthful, underneath they feel relieved. And it can be, it can be all kinds of things. But for some people, it's literally like, well, yeah, I'm supposed to lose. Like, I'm not supposed to be successful. And they feel kind of centered in who they are. It's like I had a young woman I'm friends with. This is a different kind of story, but she's got a certain illness. And that illness could probably be cured. And this was a few weeks ago. It was actually someone I know through Twitter. And I was explaining to her that how she didn't need to suffer like this. And she came back to me and she literally said, stop, you're messing with my whole self-image. She sees herself as having this illness. And traders will see themselves as only being allowed to have, a certain amount of success. Or now I have a client that I'm in Europe that I'm working with whose family, basically has told him his whole life he's screwed up. He's brilliant and he's not screwed up, but he has this role. And so we're trying to get him to break through that role and see that not only is he not screwed up, he can actually make money in the markets, which is super hard.
And how do you get your clients to get in touch with their emotions and feelings? Like,
well, I ask a lot of questions. I ask about memories. And like, what do they remember, you know, the time they, whatever, kicked the winning goal, you know, missed the winning goal, got kicked out of school, did well in school, you know, younger brother was born. I try to get them to recognize like a typical emotional sequence in growing up. It depends, because we work very much with how resistant someone is. So like, we know that if someone can answer, what am I feeling and why, and get it right, they'll be able to be more effective. But we also know that most people have been taught they shouldn't do that. And there's varying levels of resistance, just like you've been asking me about. We won't really push someone to break down the resistance. We'll chip away at the edges. I will ask people if they remember their dreams and what the sequence of emotion is in their dreams. I have one young client who was actually destined to be a professional athlete, but kept getting hurt. And we literally, his life has completely changed through understanding the sequence of emotions in his dreams. Because those were emotions he couldn't have. So like, I know it sounds wacky, but it's actually really true. Like the whole, whatever crazy story happens in your dream doesn't matter. But it's like, if that story were happening, what would you be feeling? Or what would that represent? Like symbols. So, and that will tell you oftentimes what you're really feeling, even when you don't want to know it at a conscious level.
Is meditation a tool that you recommend to get in touch with like the feelings and emotions and the unconscious, to be more creative and feel less stressed?
The truth is, I personally don't tend to recommend it.
Okay.
Now, why is that? Not because it's not good. I kind of think it's overhyped. Like the idea of sitting still and breathing and feeling what you feel is good. And people should be able to do that. Like they should be able to sit in a doctor's office and wait without even being on their phone constantly. Like we ought to just be able to sit with ourselves. So to the extent that meditation helps people do that, I think it's great. But by the same token, oftentimes meditation has this kind of undercurrent of let the feelings go. Let them pass through you. And that's kind of like feelings are bad or feelings are going to get in your way. So where I'm very much about understanding them and what they're trying to tell us, where they come from, what they're trying to tell us, and then what feeling do you want to have in the future? Back to that whole prediction thing. And so what do you have to do to get that feeling? Well, every time you have that kind of don't feel your feelings or let your feelings go, I don't think it leads so much towards the understanding.
The hedge fund legend Ray Dalio, he said, I read an article, he said that meditation for him was the single most important factor of his success. What do you think he means by that? What do you think meditation has done for him in that way?
Well, I don't know him. I do know that, or I have heard that he's speaking specifically of transcendental meditation.
Yeah.
Which my understanding of, and I'm really at the edges of my knowledge on it, but is a little more analytical, like in terms of what are you feeling? But absent any other strategy, meditation can calm you down and make you less reactive. So, you know, you got to, so my guess would be that's probably why.
Right.
Now, I would add in, though, that at Bridgewater, you know, they have a philosophy of radical transparency, which is basically you need to say exactly what you think, which, I mean, I have people I've worked with that are ex-Bridgewater who talk about how difficult that environment is and how they even, you know, so if you put those two together, that is a difficult challenge for people. But if Ray's been able to use meditation to make himself less reactive, he'd be able to navigate that more effectively.
I heard before that you have done some research about fractals, both in the market and also for emotions. Can you tell us a little bit more about fractals in the markets and in emotions?
Well, you know, the idea of fractal is that you have a pattern that repeats itself at a different size. So like, you know, broccoli, like one little piece of broccoli, actually, when you look at it, it looks like the whole head of broccoli. That's fractal, right? Well, the market clearly does that. It has sort of, you know, price wave actions that can happen on a 5-minute chart that can also happen on a monthly chart. Well, when I went to write my book, I started thinking about this phenomenon of people have like an expectation of themselves, which, by the way, here's something people can do, is ask themselves how they expect to be treated by authority, people with fame, or people with money. Like, I have one client who expects that those people will all treat him equally, and I have other clients who expect that, you know, will be rejected by anybody with more power, fame, or money. But that expectation is fractal, meaning, let's just take the client who expects to be treated equally. Like, he learned that growing up. It never occurred to him that just because someone's got more money, power, or fame, they would not be interested in what he had said. Most of us learn the opposite, right? So we have these expectations about ourselves that we learn at one scale, that we learn, you know, when we're a 5-year-old or a 10-year-old, that later we apply and expect in the bigger adult world. So I think our psychology is actually also fractal.
Okay, to round up the call, can you please give us 3 things that we can do by ourselves to take better decisions and therefore make us better traders or investors?
Change your opinion about your feelings. Be kind to, forgive yourself, and realize that actually mistakes you've made make some sense in some way. And embark upon a program to really understand yourself. Like, what am I feeling? Why am I feeling it? Like, look for, like I'll tell people, build yourself a spectrum, a 1 to 7 spectrum of confidence. So let's just say 6 is confident, like kind of where you want to be, ideally. 7 is overconfident. You don't want to be there. Like, if you feel a 7, you're like, this is probably not going to work, right? But then build out your 1 to 5, whatever the opposite of confidence is. And then use that to be able to put your negative emotions into words, right? If you're able to say, I am terrified this trade isn't going to work, and I'm going to give back the money I've made, and I'm going to be embarrassed. You're able to say that and physically experience it. You're saying words that are reflecting what's in your gut. The chances that you mess up the exit go down. And then something else happens. When you accept those agitating, irrelevant, fractal feelings that are just playing out your self-image, you're also more able to hear your intuition. And intuition gets a bad name, but there's all kinds of research saying we have actual unconscious pattern recognition based on our experience. And there's a very calm, I just know feeling that really is recognition of the pattern. And you want to be able to get to it. It's actually through those disruptive, agitating feelings that you're supposed to be controlling. It's through understanding, analyzing, which starts with accepting, that you can dilute those and hear the intuition.
You were mentioning fear as for me, that's like a kind of negative emotion or feeling. In the current market environment, maybe fear of missing out is more important to be aware of. Is there any difference between men and women, how they act to fear of missing out?
Yes. Women act on fear of missing out much less than men. Men have more of a need to be in the same name their buddies down the street are in. Men don't like to know other guys are making a bunch of money in some trade they're not in. Women don't care so much. In fact, women, they've always been criticized for being trying to be too conservative, and women won't take big risks and whatnot. Of course, then you have Kathy Wood, who's taking big risks and everybody's criticizing her, but that's another subject. I recently had a female portfolio manager tell me, I think because women always have to be careful, like this person lives in London. She's like, I have to be careful when I walk home. We're taught to be more careful, always be conscious of what we say. She's like, I think that's why women are more conservative. Now, the research says women are better portfolio managers because they don't do as many stupid things. They might not take as big risks, but they don't do as many stupid things.
Men is more reckless.
Well, they react to, like that client I said that was trying to prove he was smart, and he would do all this research to prove how smart he was, and then he'd go to a hedge fund cocktail party, or he'd go out to dinner with this buddy who was in some other stock, and the next thing you know, he'd be telling his trader to buy that stock, and we'd all be like, what? You did no research. Because he couldn't stand it. Or he was believing, his analysts used to complain that he was believing his friend's analysis more than his own. But you can never trade someone else's trade because you don't have the right kind of confidence in it.
Denise, thank you very much for the call. I really appreciate it. How can the audience follow your work?
Yeah, so my website is therethink.net. I'm on Twitter as Denise K. Shull, and now on Instagram as rethink.group. I have my book, Market Mind Games.
Yep.
Yeah.
Perfect. Thank you very much.
Thank you.
Bye-bye.
Appreciate it. Bye.
Börssnack med Hansén och Olavi.
Ja, hoppas ni tyckte samtalet med Denise var intressant. Det är ju ganska fascinerande hur mycket tid vi lägger på marknaden och kanske hur lite tid vi lägger på att analysera oss själva. Och det är kanske det som är viktigast, blicka inåt och analysera oss själva. Huvudbudskapet i samtalet tycker jag ändå var att det inte går att separera sina känslor när man tradar. Det här är någonting som i alla fall jag lärde mig när jag läste de här klassiska trading-psykologiböckerna, att man skulle separera sina känslor från sin trading. Men man behöver ha känslor för att kunna ta ett beslut, och alla beslut vi tar är baserade på känslor. Och detta är såklart någonting också som kan hjälpa oss i andra delar av livet. Någonting annat som jag tog med mig av samtalet är att hennes framgångsrika klienter ser marknaden som ett socialt spel och liknar det lite grann med poker. Att försöka leta efter någon helig graal som ska göra oss rika är bortkastad tid. Försöka spela marknaden som det ligger och försöka surfa på vågorna som erbjuds. Och med de orden så vill jag tacka för detta avsnitt. Ni får gärna gå in och tacka Denise på Twitter. Och med de orden, trevlig helg. Vi hörs igen nästa vecka.